What's up, guys? Dan and Zac back. We're here to actually talk about a new strategy that we have really started to kind of dig our claws into, known as infinite banking. And if you guys, is first and foremost, we're not selling infinite banking as a policy. We are just here trying to share how we've utilized it to educate and share what we've done. But in this video, what we're going to talk about is how we both had, maybe some poor choices and built up some credit card debt, and fortunately have been able to kind of accrue a high income to be able to stack the cash. And as we were stacking that cash, we made a decision that we didn't want to just dump it all towards credit cards, because then that money was gone forever, right? And for those of you who do not know, there is a tool out there that is a specially structured life insurance policy that we both signed up for. We both have activated now. And essentially what we're able to do is take all that money that we've stacked up, put it into this policy, and borrow against that policy, basically take out a loan against that policy so we can instantly have our money back, pay off the credit cards, and then we're paying ourselves back. So Zac, I'll let you kind of share a little bit more detail of the numbers of our numbers are pretty similar, but kind of just sharing the numbers of the breakdown so we can give some context to what people are looking at.
Yeah, absolutely. I mean, this is a concept that we've been wanting to do for a little while. We both read the book Be Your Own Banker. I recommend everybody read that book. It's a very easy read, but it really kind of deep dives how this whole thing works. But anyways, in the beginning, you get a dump, right? Which is essentially however much cash you have available that you want to put into it. You can start your policy off with that amount. I used 50,000. And 90% of that money is now usable 30 days later. So 30 days after they took that money and the policy became active, I can use $45,000 of that. And then the way I set mine up was I have to pay $5,000 every single month. 60% of that is available immediately after you pay it, right? So like 48 hours, 72 hours afterwards. So $3,000 a month, essentially, I could take back and use. You can decide however much that is. Like they ask, do you want it to be 250? Do you want it to be 500? Do you want it to be 1,000? Whatever. You don't even have to do a dump. So this is all predicated on what you have available and what you want to do. Like Dan said, we had been stacking cash that we wanted to use for different purposes. A lot of it for debt that we had occurred that we wanted to wipe away, and then some other things, right? And so that's essentially what I did. Was I had to pay $55,000 in the beginning, because 50,000 dump plus my 5,000, and so essentially I can use $48,000 of that within 30 days. So after the policy becomes mature, but then also there's another added benefit that benefits our wives, Dan, which is
Two more benefits. Yep.
yeah. So you go ahead and deep dive those as well.
Yeah. So basically, first, the cool thing about this dump, and you guys might be wondering, like, okay, well, like, why is it important that you borrow against it? So this policy is structured so that any money that you have in there earns in between a guaranteed rate of 4 to 6% every single year. So it's a very, very high yielding like savings account essentially. But the cool thing is instead of your regular savings account, if you had $10,000 in there and you took $5,000 out, the interest is only accruing on the remaining amount left. Versus the way that this is set up, since it's a loan against the value of the policy, the initial balance is uninterrupted. So it's going to continue to grow. And year after year after year after year, it's continuing to add on. Not to mention, we're continuing to put more money into it. So basically, I think we talked to, when we were getting signed up, we had talked to someone who he's 17 years in, and every dollar that he puts in, he's now able to borrow $1.50 against that dollar. So he can use that money. Now, where it comes more lucrative, and where we're going to talk about a little bit more in our community, is what you use that money for. Now, obviously, in our scenario right now, the foundation is going to be pay off our debt, recapture all that interest, because we're paying like $500 at least a month in just interest. So now that those are waived, those are paid off, we're borrowing at, I think it's usually between 3 to 4% from the life insurance companies, the banks. It's our money, it's available, so there's no credit check, there's none of that process. Basically, hey, I just want my money, I'm going to use it for XYZ. Now each month we already have been before we were doing this, we had already been making minimum payments and et cetera. And all that extra money we were setting aside to be able to do this. So we're just going to basically pay ourselves back. Once Zac pays that 45,000 back in his example, now he has 45,000 again to be able to borrow on top of all of the months that have accrued that additional 3,000. Right. Each year, essentially, it's a lot of detail. It kind of blows your mind when you're looking at it. But each year, the amount that you put in, I think it's year 4 or 5 that you end up being able to pull all of your monthly
I
amount
believe
out.
it's year 3. So year 1 is 60%, I believe. Year 2 is 80%. Year 3 is 100%. Year 4 is 105%, if I remember correctly.
Yeah. So throughout our chart, I mean, with the numbers that we're putting in, we're obviously putting about 50,000 in right in the beginning, then 5,000 a month. That's 60,000 a year. That's in there, growing, uninterrupted, compounding year over year. I think in like 10 years, that's worth what, 700, about 700,000, I think was the number.
Yeah.
Somewhere in that range. But that's basically cash value amount that you can borrow against. So whole life insurance has gotten a pretty, I mean, honestly, you only hear the bad reputation about it, but these are definitely unique structures that are set up. Make sure whoever you're working with, if this is something you want to set up, knows what they're talking about. In our community, we'll share resources about who that would be. But the other cool thing, I know, Zac, I'll let you kind of share maybe some examples of future stuff that we're looking to do and utilize of how to just continue to keep this money. And a lot of these guys come from, this is how like the Rockefellers, the big families continue to build their wealth. And they open up multiple of these. And this won't be the last one that we open. We're probably going to continue to open up more to be able to utilize this dump and initial pour in process.
Absolutely. I mean, pretty much any wealthy individual you can look into, and they have these policies. This is how Walt Disney built Disney World. The Rothschilds, this is how they essentially own every bank with every country just about. Bill Gates, all these guys have these because obviously it grows. When you put money in there too, it is protected. Somebody can't sue you and then get a hold of those funds. Those funds are protected. It's like it's in its own trust, so to speak, and it grows. Compound interest, uninterrupted. It's the eighth wonder of the world, so to speak, as Warren Buffett likes to talk about. So ways that we're going to use it, guys. I mean, it's really endless. I mean, you can, whatever you can think of that you're paying for right now, you can use this for. And that example that we hear all the time that kind of resonates with people is buying a car, right? Like, let's say you have a son or a daughter, and you decide to open up this policy, and you're putting $500 in there every single month. Let's say they turn 16, they want to, which would be like around 100 grand by that point. Let's say they want to go buy a Honda Civic, for example. You tell them to go to the Honda dealership. They'd say it's going to be $30,000 total plus $400 a month, whatever. So then you tell your son or daughter, you know what we're going to do? I started this whole banking policy for you. You can explain the entire thing, how it works. Go buy cash, then make your son or daughter pay their bank back $400 every single month. So now they're the bank getting the interest payments. And was saying, but how we're going to use it is lending. I mean, we're a part of a lot of real estate masterminds, different things where we can lend out money. We're going to use it to buy our own projects. I mean, imagine if you take out money, you go flip a house for say 25% ROI, and then but you're also making 5% inside of your policy. So it's like you're making 30 after you flip it. You just go and put the money right back, and you just keep the process going over and over again. So there's lots and lots of different ways that we'll do it. And I'm sure as ours grows and more opportunities come up, we'll be able to really think about it. You can buy businesses with it, all kinds of stuff, honestly, which is what's so exciting about it. And you can literally, like Dan said, you can open up multiple of these. I think like 6 or 7 per person. Also, something too, guys, every bank in the United States opens up a policy for every vice president at the bank. So if you go and look up a bank's directory of employees, you will see they have a ton of VPs because when they become a vice president, they can open up a policy in their name for the bank, and which is just makes the bank wealthy.
Jim Harbaugh, his contract was actually set up like this. So go check that out. Someone made a YouTube video on how it's set up, but basically Michigan they were basically paying his contract through a whole life account. I think what they were doing is they were paying the whole life account and then they were borrowing against it to pay its contract. So now I think it's in his name, but once he dies, they're the beneficiary. So they actually get all that money back, which is bananas. And that's the other thing too, is when you borrow against it, since it's your money that you've put in, you actually never have to pay back any of the loan that is taken out. Like if there's a balance on the loan, because what happens is your death benefit is enough to cover that, and then the additional will go to your beneficiaries.
Yeah.
So insane.
It's huge. And it was very easy to set up. And, now if I die, my wife gets paid, right? Which is nice. She's able to sleep a little bit better knowing that she's going to be taken care of. And, obviously we just opened it recently. So it's not like it's going to be a fat payment if I were to die tomorrow. But as this thing ages and as we put more cash into it and these types of things, that grows. I mean, 5 years from now, I think it's like 3 million she would get. There's probably going to be something on my head if I don't make some things happen. I'm just kidding. But no, it's massive. It's absolutely insane, guys. We recommend every single person definitely look into doing it just to simply pay off debt. I mean, why not? It's not like you're changing anything. It's just you're changing what you do first, right? So you're paying yourself first. So when Dan and I make money, instead of putting it into our bank accounts, I mean, technically it goes into our bank account first, but instead of spending it, we put it into whole life where now it's like stored. And then what we do is we borrow against it, but the cash stays in it. So it's technically like the insurance company loans us the money. We then use the money, and all it does is affect the death benefit. But the money that we use is still in there. It's still growing at 5%. So we can continue to put more cash in there. And it's just like your own bank. It's your own safe haven, but nobody can rob it. And it's huge. And guys, here's the last thing I will say. Every business in every industry has gone under, has had to be saved in some capacity by the government, or has been wiped out, except for insurance companies. Insurance companies are the oldest business that has never been bankrupt, has never gone out of business in the history of time. So, there's a reason for it, guys. I mean, there's a huge reason, and there's tons of resources out there. But we'd love to help you out if you're interested. I mean, we don't get paid for it, so it's not like we're not making this video to make money off it. Just to simply provide value to you guys, because this is all about the action effects and just provide value to our people.
Check out our community if you want to see how we utilize it as we continue to evolve and grow. You're going to make money, keep money, duplicate the money, or multiply the money, right? Whatever you want to use. But
absolutely. And that's the key, guys, right there.